Hello everyone, this is Thiago with your structured products update. Let's run through some of the big moves in October and year to date, both in EMEA, APAC and North America. Starting with EMEA, number of products, October rose 24% in terms of number of products. Compared with last year, and the regions continues to grow. I think across the market, it's clearly a shift towards income and growth products, less capital protected. But I think what's interesting is the issuers are leaning into simpler structures, but with more innovation on the underlyings itself. And that has led to equity index linked volume pick up in the number of countries, from Germany, from France, from Italy, and so on. So I think EMEA is definitely getting momentum. Where I say that there is the biggest momentum is APAC. Taiwan, extremely strong. South Korea, double-digit growth still in October, not as fast as in September. That definitely continue rising, and most biggest, of course, Hong Kong has been outperforming any expectations with rapid growth. Again, short-term products, a lot of, I think, Nvidia's success, like it's booming. The both the performances of the products, and people are investing. And again, Nvidia is now close to 25% of all sales in Hong Kong year to date. But again, we will dedicate more APAC deep dive soon. In North America, again, Canada strong and steady. Markets tracking 28% year to date higher. And again, there is a good mix between capital protection, income, and growth. And I would say the most popular products is the callable yield, callables, or Phoenix autocallables. That's the one that it's picking up. Again, a lot to do with expiring products. The equity markets have been helping, of course, and that means people keep reinvesting. And of course, in the US is up nearly 12%, and in October that was a 45% jump compared with last year. So very strong, and I would say that this month will also be very strong. In terms of shifts, I think growth is leading the growth on the different product types. And another thing, if in Europe, the single underlying, especially equity indices or QIS indices have been increasing. It's in the US, due to the lower vol, lower rates, in the worst off structures are now at same size as the single underlying deals for the first time. So that's a big shift. Clearly, people are going to worst offs to keep the high hills that people got used to. And of course, the autocallable just jumped the position, especially growth autocalls with that just the Barry Phoenix is with 1/3 of the sales, which is incredible. And I think the last update, of course, is the SPI, the last event a couple of weeks ago. There were a lot of themes: QIS adoption, ETF-linked payoff. I think you've seen there were already filed seven, but there is 12 more ETFs coming using structured products payoffs and some of the different features. I think that's going to be the focus for the next months, and even crypto linked annuities that we will probably see very soon. Anyway, that show how fast the US market is evolving. So the message is clear: structured products are growing, they're diversifying across the globe, and investors are becoming more sophisticated in all regions. So thank you for watching, and see you in the next update.